Well, good morning, everyone, and welcome to today's FS Club webinar, which is very much on Ho Chi Minh City and the IFC in Vietnam. There are some amazing things going on, and we're really looking forward to discussing it with our panelists here today. Today, they'll be discussing it directly from, in this case, 3 out of 4 are actually in Vietnam itself. But before we get going, you know me, I'm Michael Manelli, one of the directors of Zien, and we really do love these webinars, which we can only do thanks to the generosity and, may I say, tolerance of our sponsors who allow us to range widely and freely across technology, economics, and finance. Now, my job today is to get out of the way as quickly as possible, but 3 points of housekeeping. Please post your questions and comments using the Zoom question facility. I will be fielding as many of those comments as we can in the 20 minutes available to our panelists who will answer them succinctly, as they always do. This recording will be available in about 2 days, and a link will be shared with everyone in a follow-up email. And in this particular case, there are a number of extra slide resources, which will also be available now on the event page, but also in the link later. Now, if I can, just a quick word on the subject itself. You know, Vietnam is a country of 100 million people, and I had the privilege of visiting there last year and realizing that the businesses there are thriving. There's an ability to diversify supply chains, avoid tariffs on Chinese goods. There's a young, skilled workforce, a strategic location, low costs. The infrastructure is improving and is actually pretty good anyway. It's an attractive hub. And then we've got favorable trade agreements such as CPTPP and EFTA, and a lot of pro-business policies. So it's a big location for manufacturing in electronics, textiles, and consumers. But a number of people are seeing the excitement and energy of a fast-growing economy and its tech sector, an emerging financial sector, which we'll be focusing on today, and even, dare I say, real estate opportunities. And we're here today to listen and learn. So with no more ado, if I could, Will, over to you.
Fantastic. Thank you so much, Michael. And hello, everyone. Thank you all for joining. I'm Will Lawrenson, and I'm the Deputy Consul General and Head of Trade and Investments here in Ho Chi Minh City. You're going to hear from me very briefly before I hand over to the real experts on all things financial services. So I'm really pleased to see so many of you on today's webinar. It's a really fantastic time, I think, to be betting on Vietnam with a booming economy and really enviable growth stats. And I say that on behalf of the British government. We would love anything similar to what Vietnam is achieving at the moment. And this, of course, will all be underpinned by the plans that Vietnam has for its financial system and for an IFC specifically. We here in the British government have been really strong supporters of the IFC project in Vietnam since the very beginning for the last couple of years, and working with our partners, the City UK, and we'll hear from Andrew Oldland later on. We provided technical assistance, capacity building, and recommendations on how best to approach the design of the IFC. So bringing sort of UK experts to meet with Vietnamese policymakers and regulators. And in particular, we have recommended that Vietnam continue to develop its business environment to be more competitive and more attractive to foreign investment. And it's also important for Vietnam to focus on meeting various international standards, such as IFRS, as well as accelerating professional training in the financial sectors. And we have UK organizations here, such as ACCA and ICAEW, on hand to support these efforts. And the British government, we're really keen to continue supporting Vietnam through its design and implementation phases of the IFC project. And indeed, just last month, the Ministry of Planning Investment, which is one of the key ministries running the IFC, formally requested our ambassadors continue support. So we are on hand to help. So that's enough from me. I'm going to pass it over to the rest of our wonderful experts. And I think up next, we've got Dominic or Han from Standard Chartered.
Yeah, thanks. Well, let me leap in there, and a very good morning to you all. I'm Dominic Scriven. I'm the founder of Dragon Capital. We're an investment firm. We've been operating in Ho Chi Minh City for the last 30 years. Me and my colleagues share in the general enthusiasm for the development of an IFC in Ho Chi Minh City. And I've got 4 slides to quickly whip through just to point out some thought points from my role as a practitioner. So first slide, please. So what's the context in Vietnam is, as we heard from Michael, the economy is booming. 7.1% growth for last year, 7.5% to 8% growth forecast for this year. The economy is strong. No questions about that. The country has aspirations to becoming a high-income country by 2045. And that involves the need to avoid the middle income trap. Key to that, of course, is to make sure that development is spread throughout the country. Now, in recent years, the manufacturing investment that Michael referred to has been focused increasingly on the northern provinces of Vietnam, whereas, let's say, 20 years ago, it was on the southern provinces. And there's no question that various parts of the economy, and Da Nang in the center as well, could do with a boost to raise their level of growth towards this high income aspiration. There's some debate in Hanoi, next slide please, in Hanoi at the moment over what the aspiration is to 2030, but we're increasingly hearing that Vietnam aspires to double-digit growth rates driven by government efficiency and heavy investment into infrastructure. So that's Vietnam. Put into a regional context, of course, Asia is, notwithstanding various pockets, Asia is in generally pretty good health. And the level of interconnectedness continues to grow. The level of trade, the level of services continues to grow. The historic centers, be they, Tokyo, be they Seoul, Taipei, Bangkok, and obviously, of course, Hong Kong and Singapore, are beginning to run up against infrastructure constraints, cost bases that make them less flexible to people who want to set up their regional operations. And of course, in the case of Hong Kong, the refashioning of Hong Kong's model and focus in recent years has seen it become increasingly focused on the economy of China. No surprise to that. More recently, of course, and this is still very much a live issue, supply chains are being reconfigured all over the region. Vietnam happens to be, on most analysis, a pretty big beneficiary of that. And notwithstanding near-term concerns over Trump, we feel that medium-term Vietnam will continue to benefit. So next slide, please. What are the paths ahead for Vietnam? And I stress here that Vietnam and the MPI that Will referred to, the implementing agency, they talk about the Vietnam Financial Center. And there are two locations identified. One is Da Nang in the middle of the country, and the other is Ho Chi Minh City, where we operate. The emerging models that look realistic and practical and relevant are in Da Nang, a focus on leisure, gaming, tourism services, and of course an interesting idea, which is a hub from the Pacific from the East Sea into Laos and Cambodia, underpinning the future for Da Nang. Whereas in Ho Chi Minh City is perhaps a more conventional model, an operating hub for regional manufacturing companies. We see this happening already without any government incentives, people beginning to locate their regional operations from other places into Ho Chi Minh City. Also, a financial center. Vietnam has had good growth in its financial sector, but most observers feel that there's scope for an additional leg up. And here's the low-hanging fruit for the regional headquarters: IFRS, FX portability. These are basic skills. They lie within the hands of Vietnam at the moment. In the financial space, most people focus on a private placement regime. We can talk about that later if anybody's interested, but that's clearly a gap in Vietnam's current financial sector, and it would fit ideally into the International Financial Center in Ho Chi Minh City. And I'll finish my comments there. Thank you very much.
Thank you, Dominic. Over to you, Han.
Thank you. Good afternoon, everyone. My name is I am CEO of Standard Chartered Vietnam. We have been operating in Vietnam for over 120 years with total 1,500 staff members. Today, I'm very pleased to have the opportunity to talk about this interesting and very important topic for Vietnam and also for all the foreign investors in the country. As you are aware, Vietnam is set to establish the IFC, and a strong financial service sector plays a crucial role in building on Vietnam's successes and will help Vietnam to achieve its ambitious 2040 and 2050 economic goals. A successful IFC will allow Vietnam financial service sector to accelerate the development and fully integrate into the global financial market. Next slide, please. As Dominic just shared, we are aware that both Hanoi and both Ho Chi Minh and Da Nang have formed up the steering committees, and expectedly, more detailed plan will be submitted to our government in the coming May. In the meantime, the key tasks set by our Prime Minister Phạm Minh Chính are from number 1 to number 5, is shown on my slide. Among which I think the task number 4 and number 5 are most critical for the success of Vietnam IFC. Why so? Because as you experience, the current law and regulation for banking sector in Vietnam have number of restrictions. And we all understand the underlying reason for such restriction, which are mainly to ensure the safety of the banking system in monitoring the capital adequacy, bad debt, speculation, and also transparency of the banking sector. However, if the same law and regulation would be applied to the IFC, it could be very challenging for the global institutions and investors to participate. Next slide, please. Dominic just mentioned about, and also Michael just mentioned about the booming economy of Vietnam. And the fact is Vietnam has been growing our economy sustainably during the past 10 years. Despite significant leadership changes in the recent years, it has been successfully maintaining political stability. This solid foundation has consolidated the confidence of local people and also foreign investors, and has put Vietnam in a strong position to build up an IFC. Vietnam might leverage on the successes of other IFC. However, it also, should win on its own unique features to leapfrog. I would like to share with you an example of successful IFC, which is DIFC. So, Standard Chartered is a global bank, and we are very fortunate to operate in 52 markets, in which is cover almost all the IFC in the world. However, we actually would like to share the example of that DIFC. As you seen on my slide, DIFC has achieved a lot of successes in many fronts, among which I think the number 2, law regime and independent regulators are key success factor for DIFC. And if Vietnam would, apply, similar model in terms of law regime and regulator, it would be very helpful to incentivize and facilitate the capital flow in and out, and also operation of our future IFC. Next slide, please. Among many other benefits and values that IFC adds to Dubai economy, such as capital raising, attracting FDI, strengthening local financial sector, IFC also have created abundance of high-skilled jobs for Dubai. So, it's the end of 2024, DIFC is home for over 6,000 firms around the globe, over 370 wealth and asset management firms, over 50 pure-play hedge funds, 125 companies, insurance and reinsurance sector. The total AUM is about $700 billion. DIFC has also created an additional total workforce of almost 44,000 before it was established. Next slide, please. The IFC success also been around, 5 competitive strategic pillars. Given the regulated environment for banking sector in Vietnam, I think that the legal regime and independent regulator for IFC are most critical to start with for Vietnam IFC. Next slide, please. Now, I want to touch on a little bit on the impact that the IFC, Vietnam IFC would facilitate for the UK and Vietnam trade corridor. So for many years, the trade and investment between UK and Vietnam has been reporting a deficit, and it looks like the deficit of the two countries has not been improved during the past 5 years. We believe that the CPTP and UK-Vietnam Free Trade Agreement will have to push the trade flow between the two countries, and the establishment of Vietnam IFC will facilitate the opening of UK business in Vietnam and more trade flow into Vietnam as we expect. And as you are aware, as of now, mainly large corporate and large global financial investors, able to invest into Vietnam. Only why so? Because before these companies, decide to invest, they have to, spend a lot of resources into, studying, researching the market and also legal framework. But if the IFC, if the Vietnam IFC would follow the standardized procedures and regulation, which, will open up the opportunity not just for the large corporate, but also for UK SME fintech startup, to invest into the country. And as you see, the great example that I just shared is the IFC. Is the end of 2024, IFC is already home for thousands of fintech and startups, and we expect Vietnam would be able to replicate the same. In addition, at the Standard Chartered, we are discussing various initiatives with our partners in UK, such as UKEF, potential investors, to support the investment in Vietnam too. Next slide, please. Now, I would like to touch on a little bit on, Standard Chartered role in the, setting up the IFC in Vietnam. As I mentioned earlier, Standard Chartered has been, we operating in 52 markets, and we will leverage on our network of 52 markets to connect our clients and partners in our footprint. Next slide, please. Vietnam's sustainability goals align with the Standard Chartered sustainability agenda as well. We actually can further enhance which can be further enhanced by the establishment of IFC. So as of now, we offer over 40 the products, the sustainability products, and we actually have the expertise team already set up for over 20 years. However, the demands of the sustainability product in finance sector are evolving. And as at Standard Chartered, we continue to invest in designing the product to meet, our client demands. In Vietnam particularly, we are proactive in working with relative government bodies to implement the JP. Of course, there are a lot of challenges, for the Vietnam government as well as for market participants, but we will try our best to bring in the global expertise, best practices of the countries that we have a presence to share with Vietnam. And we will seek every opportunity to provide the sustainability financing product to the Vietnam market. Thank you.
Thank you, Han. Absolutely fantastic. And folks, those slides will be posted. Do remember to click on the QA icon. We'll be starting questions and answers in about 5 minutes. Andrew, over to you.
Thank you, Michael. Just by way of very short introduction, I'm a senior lawyer. I am chairman of the IFC working group that was set up between the City UK and the governmental implementing agency, the MPI, in Vietnam. And our membership includes a lot of financial institutions in the financial sector, as many of you will know, including those of both of the two previous speakers. We've provided 3 reports to the Vietnamese government in the course of our work, culminating in a report in July of the summer of last year. Part of those reports informed the report that was put before the Politburo in November of last year, proposing the move towards the IFCs in Vietnam, which was accepted by the Politburo, and we're now moving on within the progress of the IFCs to the next stage, which will be legislation before the National Assembly sometime in the summer. I can comment on our understanding of the proposals because we've been working fairly closely with the Vietnamese government, but I do not speak for the Vietnamese government. But what I'm going to do here is just outline very briefly our understanding of what the IFCs are going to look like and the underlying logic, structure and rationale. First of all, as you've heard, it's going to be developed not in one city but 2, an international financial centre in Ho Chi Minh and a regional financial centre in Da Nang. Second, these financial centres will be developed in stages over time. So what is determined at the outset may not be where we end up in a few years' time. The initial model that has been chosen, and this is important, sits between, on the one hand, an enhanced programme of modernisation and capacity building, and on the other hand, the fully independent model with its own jurisdiction, such as we see in the Gulf and now with the AIFC in Eurasia. It has been described as a hybrid model, so it sits between those 2 parts of the range. Although the centres will have their own defined geographic territories and will be subject to their own regulatory regimes, Vietnamese law will still apply within the centres, and ultimately the Vietnamese courts will still have jurisdiction. It is proposed that these centres will operate closer to what's sometimes referred to as a club model rather than the enclave model. In other words, not every organisation within the defined territories will need to be centre participants. It's a question of choice. You can choose whether or not to be a member of the club. There are a number of very important aspects which will set these centres apart in terms of structure and policy from the rest of the domestic economy. First of all, I'm just going to touch on the institutions, and then secondly, some policies, and I'm going to deal with these very briefly. The proposal is that 4 institutions will be established, a steering committee which will be chaired by the Prime Minister, which will have strategic and supervisory oversight. There will be a financial centre management and operation agency, which will be the executive of the centres. There will be a financial centre supervisory agency, which seems as if it's going to be largely equivalent to a financial regulator, but its precise role is still being worked out. But it's going to be staffed by representatives from the central bank, relevant national ministries and the city authorities. And then a dispute resolution agency to resolve disputes between centre participants, disputes with clients of centre participants, and importantly, between the centre participants and the centre bodies. The centres will have their own arbitration centres, and contractual choice of law and dispute resolution will be respected. Turning now to the key breakthrough policies, these have been divided into 2 groups. Group 1 are those which are able to be implemented immediately, and Group 2 will either be piloted or will follow in short order when circumstances allow. The more eye-catching Group 1 policies are these. There'll be a streamlined one-stop system of registration set against certain criteria. English will be the preferred language of the centres. with a legal validity equivalent to Vietnamese. There will be simplified procedures for priority sectors, in particular capital markets, currency, banking, insurance, fintech, and the digital economy generally. There will be special regulations for capital market development, including what are called exceptional incentives for green finance, sandboxes, and special regulations on registration, depository, trading and clearing of listed securities, and also IFRS accounting standards. There will be better market information systems focused on the management of risk, operational, market and credit. The infrastructure will be funded by the state budget, the city authorities and the private sector, and initially strategic investors will be sought to partner the governmental authorities. There will be a lot of training that will be kick-started. There will be a streamlined system of work permits and visas for foreign workers and their families, and there will be tax incentives and other support for participants. As to group 2, currency, very tricky topic. I can see Michael wants me to move on. I will.
You're a few minutes over.
Currency will be addressed, but you will be permitted as centre participants to trade in currencies other than the Vietnamese dong. So I will wrap up and simply say we as a working group look forward to continuing to work with the Vietnamese government to deliver this project. Thank you.
Wonderful. Thank you, Andrew. Well, let's get cracking. A kick-off question. Dominic, you've very long been a booster for Vietnam. Can you give us a current state of foreign presence on the stock market, please?
Sure. So Vietnam's stock market is $250 billion, the equity market. If you add the corporate and government bond markets, you get to about 300 billion. GDP is 500 billion, so market capitalization is about 60%. Equity market capitalization is 50%. The government has aspirations to get that 50 to 100% before 2030. And how's that going to happen? Well, there's organic growth, but a lot of hope is pinned on emerging IPO pipelines. Vietnam was very successful in the developing IPO market in the mid to late teens, driven by equitization or privatization program on behalf of the government to reform the SOE sector. That tailed off. A lot of that's been done. Half the listed companies emerged from privatizations. But now I think the focus is shifting much more to the private sector, with some very large companies that have made it clear that they're just planning their process towards IPOs. What's the role of foreigners? Well, foreign investment is pretty low, actually. It's currently about 15%. But if you take the strategic ownership out of that, conventional portfolio investment is really about less than 10%. And clearly that can be everybody, including the government. In fact, I was just reading this morning, the chairwoman of the State Securities Commission and the Deputy Minister of Finance, separately in separate interviews, both said that this year it is absolutely critical that Vietnam succeeds in moving to emerging market status. So that's likely to iron out a lot of the issues that Andrew was referring to and that Han was referring to, promote the flow of capital, which is necessary to bring down the cost of capital in Vietnam, which would be good for Vietnamese companies and good for ROEs.
Thank you, Dominic. We've got a question here from Hong Lo, which I'd like to ask Han. Hong Lo is looking at, with BNC Company, about professional market research on the state of HCMC as a global financial center. What, particularly given the experience of Standard Chartered globally, as you emphasized, what is the standard must-have qualification to be an IFC? Is it to be recognized as an international, broad and deep, or are there other conditions or measurements that you would apply from Standard Chartered as you look globally?
Yes, Thank you for the question, Michael. So as I shared briefly during my presentation, I think, Vietnam is a bit in unique positions for the banking sector as of now, because, is the bank, one of the oldest bank operating in Vietnam. We actually been operating under very tight control of the regulation. Over time, the State Bank of Vietnam, the government of Vietnam and State Bank of Vietnam are also relaxing a number of regulation. But I think, the most critical for Vietnam IFC to be able to compete with other IFC in the regions or in the global landscape is simplify the compliance issue. Yeah, because if, as I mentioned earlier, if we apply the same restrictions of the current banking sector into the IFC, then I think the global investors and foreign investors are very reluctant to invest, because they have to be comfortable that the money flowing must be flow out in the easiest way and fastest way as they need it. Because for the banking industry as of now, when the money go in, it's have to come in the certain format and regulation. And when it goes out, we actually have to ensure that we fulfill all the requirement of the State Bank of Vietnam, or we have to submit full set of supporting documents, right? So that one, for the banking sector, I think is okay. But for the IFC, we expect the amount of the capital that the global investor will invest in is significant. Then if we apply the same control, then it's very difficult. And I think, for the other market condition, I think Vietnam is quite competitive already. As I mentioned earlier, Vietnam's been growing the economy very well during the past 10 years. And politically, it's very good landscape, very stable, despite the changes of top leaders. In terms of geopolitical, we are also in good position to have a competitive IFC. My only concern is just the legal regime and the simplifications of the compliance. And in terms of what model Vietnam is going to apply, I think Vietnam, it's also, in Vietnam actually can take advantages of the other IFC in the globe, because we learn, the government of Vietnam, we learn from their successes, also from their failures to leapfrog.
Thank you.
Thank you.
Will, we got a question here. What do you think is the most important value proposition Vietnam can use to leverage and compete with other regional IFCs? What's the wider picture in Southeast Asia?
I think there's a couple of things that Vietnam really has going for it. So I think number one that's often touted is its stable government. It is a one-party socialist country. That means an awful lot of stability. And if you look around the region, democratic processes can lead to a lot of instability. We see that certainly across the whole world. So that's definitely number one. I'd say number two is the growth figures, which I think we've discussed and others have pointed to a lot today. They are the fastest in the region and some of the fastest in the world. And that's really underpinned by a really young, digitally literate population who are very highly educated and obviously increasingly companies are moving manufacturing sites away from other parts of the region, say China +1 strategies, into Vietnam to sort of boost the growth. So there's a lot of energy, a lot of dynamism. And when you look to IFCs in the past, historically, they've grown up around trade entrepots, trade zones. Vietnam is a heavily trade-dependent country, so it's sort of a natural next step for it to develop an IFC. I think trade as a percentage of GDP is something like 130% here, which is huge. So it's almost an inevitable step, I would say, to develop its financial capabilities and become or develop an international financial center.
Great. Thank you. Andrew, obviously, you've got a background in Vietnam and in finance, but you're also a lawyer, and I'm conscious that there were discussions about following, as Han pointed out, the DIFC ADGM models of having a common law jurisdiction for commercial issues. Is the understanding that the government will be retaining Vietnamese law and Vietnamese court procedures? This is what Kenneth Atkinson thinks. And if that is the case, how much of a detriment is this likely to be? Do you foresee any potential change in the government's position?
Well, Thanks, Michael. Thank you for the question. As I said, Vietnam is choosing to develop its IFCs in stages. That is unlike the DIFC or the AIFC, where the whole model was implemented right at the outset. So it's going to be developmental over time. In terms of the attractiveness of the IFC, clearly having a proper common law basis with an independent judiciary and an independent financial regulator is extremely attractive. But in my view, I think Vietnam can work in that direction and work to achieve a great deal without going, if I can say so, the full Monty right to start with. In other words, the regulator, I think the financial regulator is going to be absolutely key. And if the financial regulator can start to develop its own independence, bring in some expertise, have proper authority, and there is this dispute resolution agency that is largely left alone and allowed to deal with centre business, then I think it can achieve what it needs to achieve.
Thank you. Dominic, the question here for you specifically on what do you see as the evolution of the asset management sector?
Well, that's obviously my business, so I'm pretty optimistic about it, but you might well discount my words there. But the bottom line is this, that Vietnam, like other Asian markets, is a heavily retail market, and there's an absence of institutions. In fact, of turnover in the equity market, some 90+% is accounted for by individual investors, leaving 10% for all forms of institutional investor, foreign or local. So, most people would say that creates a lack of stability. And in fact, in recent years, we've seen some volatility, some shakes that come to sentiment through events. And I believe the regulators are pretty keen to try and pull that together. So how's that going to happen? Well, it's quite difficult to create into a vacuum, isn't it? But I think there are things like, for example, the growth of the pension industry. Vietnam's still got some good years in its demographics, but like everywhere else, people are going to need to start saving for retirement pretty quick. I think the other another angle would be to promote investment, greater investment in equities from the life insurance sector, which is already a very large, which is the bulk of the $25 billion in assets under management. 20 is from life insurance companies, and that's mostly in fixed income. So I think combination of wealth increases, income growth that we've been hearing about, as well as professionalization. And I think you at the very beginning, Michael, you talked about financial education, financial awareness. This is a very key need for all of us involved in the industry, and I think government's quite open to that. We get more confidence, more realistic approaches to people saving for the long term. So yes, I think the government's number is to get to $100 billion in assets under management in the next 5 years. I don't know whether that's going to be achieved or not, but there we go.
Excellent. Well, I remember you and I agreeing violently back in September that actually domestic savings, insurance, and pensions are the way to go. Just another one. You touched on education. I've touched on it. Han, you are a very big employer, and you hope to be a much bigger employer in Vietnam. And when I was there, I noticed a really well-educated workforce. I had a brilliant session with the British University of Vietnam, both in Ho Chi Minh City and up in Hanoi. I was very impressed with the quality of the students, etc. But there is this sort of gap in professional services. There's just over 1,000 certified accountants. I think there are 50 chartered accountants, and I could go through actuaries and other sectors. What do you see as the development of qualified financial services professionals to support this IFC growth?
Thank you, Michael, for the question. So I actually would like to share two things. First, about the qualifications of the local people. So I think the quality of the local people has been improved over the past 10 years. And of course, the majority source of the labor force come from local people. However, Vietnam markets has become very attractive for the foreign expertise as well. So like Standard Chartered, I have many colleagues, outside Vietnam, 50 markets are keen on to join us in Vietnam. So I think, we actually can leverage on both, resources, the local labor force and also the foreign labor force. I think for the set up the IFC at the beginning, we might need to leverage a little bit more on the foreign, resources of labor force. But over time, this group of people will transfer the knowledge and skill to the local labor force. We actually have very good quality of educations in Vietnam. However, the language is still the barrier for the local people, even though it has improved significantly over time, but I think it is still barrier. At Standard Chartered, we actually have full, training for our staff members in terms of the product sets, which we leverage on the network of Standard Chartered, and we actually build up very good library and training online for all the staff members in Vietnam. For the Vietnam community, we also very actively provide the education and training. And it is one of the key pillars of Standard Chartered worldwide and also in Vietnam for every market that we operate in. So, we actually open to provide that kind of training for, any organizations or any partners in Vietnam. And especially, we certainly will contribute to the setup, the IFC, if it is required by the government of Vietnam. Thank you.
Thank you. And I should have mentioned that Catherine McDowell was particularly interested in that. Just turning to you briefly, Will, two things really. One, a question about foreign remittances from Mark Kenderdine Davies. How important are they, the sort of diaspora? Is that something that is material? And I guess probably the second thing is that what do you think about, as a newborn IFC, is there any niche that Vietnam should pursue, or should it pursue bold, sort of broad growth?
Yeah, thanks, Michael. I think I'll take the last one first. So in terms of a niche, in the report that the City UK produced and submitted to the government here, there are a couple of key areas that we recommended for focus: green finance, fintech, and capital markets. I'd say there's no way that Vietnam should try and do absolutely everything. That's a sure way to failure. And I think in addition to those couple of areas, I would also perhaps add commodities. Vietnam is a huge agricultural producer. The Mekong Delta in particular produces much of the world's rice, coffee, etc. So focusing on a sort of local niche like commodities trading could be an interesting way of setting themselves apart from the crowd. On foreign remittances, it's not something I am particularly well briefed in, but my understanding is a lot of foreign remittances are sent back and largely put into savings or invested into real estate. I'm not sure there's an awful lot necessarily invested into sort of projects and sort of the markets here. Dominic may well tell me otherwise, but I think there's probably a culture change that needs to change there. A lot of the growth in Vietnam is driven by foreign investment and manufacturing for export, etc. at present.
We've sadly come to the end of time. There are a number of questions there. It's been very good with the audience. But if I may conclude on a quick summing up to the four of you, and in particular, I'd like you to kind of cast yourselves back to, you're 21, and what one bit of training would you advise somebody to take and use as they emigrated to Vietnam at the age of 21 from anywhere else in the world? And if I could, Andrew, I'll start with you.
Wow. Gosh, what a question. I'd say language.
Super, thank you. Han?
I would say enforcement, because it's been burning questions for everybody who participates in this market.
Dominic?
I'd say listen.
I don't think it could have gotten briefer than that. Well done. Will?
I'm going to say train your palate. And I say that because the Vietnamese love food, and an awful lot of the best discussions, the best business moments you're going to have are over meals. And the more you can eat and the more you can impress your Vietnamese interlocutors, the better. So get used to eating lots of delicious, wonderful things.
Well, thank you for ending on that. Well, folks, it's been a wonderful taste of Vietnam, and I hope that you've enjoyed it. I have. We can only do so much in 45 minutes, but I truly appreciate the views, the very special views we've got today directly from Vietnam. If anything, I've become a bit of a Vietnam booster. I genuinely believe that there's so much potential there, and I'm delighted to see a team that we are very proud to be affiliated with, who are working so hard at building up this IFC program in Ho Chi Minh City and Da Nang as well. Looking ahead, we have a number of events, but probably the biggest one is the launch of Global Financial Centers Index 37 next month. All the rest, obviously, on the website, and I'll leave that be. So if I could, I'd like to thank very much all of our participants today. I have, of course, my famous Buddhist clapper here, which is, I'm afraid, technology is unable to provide proper applause, so I do it for everybody. But we have seen some amazing comments here, and they're coming in the chat room. A few people, for some reason, have been emailing me, but I've been absolutely delighted that the four of you have taken the time to come today and share your knowledge and experience with us. And we hope to see you soon and get an update on Ho Chi Minh City next year. Thank you.
Thank you.
Thank you.
Thank you. Bye-bye.